Hedge funds are cautious heading into next week, so should you be? Well, in this video we're going to be assessing exactly this. We're going to be looking at the broad market conditions, the macroeconomics which could dictate what happens next week, and some of your favourite stocks in which could go potentially parabolic next week or fall off the edge of a cliff. So going off of last week's performance, what have we really seen? Well, we've seen the S&P close up around 1.24% for the week, which is really strong despite there being a lot of volatility. So it's clear to see we are definitely in a bullish position right now within the US market, but I think it's fair to say there is a good reason as to why I think this shouldn't actually be going up, especially in the way in which it is. So currently on a Schiller's PE ratio here, we can see that we are now at 36 still, which it has been for the last few, weeks now. And I think it's fair to say that buying into the S&P at this point is relatively risky. This definitely looks very overvalued, and especially when you're comparing this to CEO confidence and earnings that have been coming out, they just haven't been as good as we have been expecting them to be. But despite this, we are actually still seeing the S&P rally up, and there could be a very good chance that it will continue to rally up just from here going into next week. But we will get onto my prediction later on in the video. To be clear, I'm not saying that buying into the S&P is a bad idea right now, because I think the momentum will always carry through for it, but intrinsically it looks to be as if this is slightly unnatural and potentially not as supported as we would like to see it. But despite a lot of volatility this last week, we have actually seen it continue to climb. So it does look to be very bullish at the moment despite the volatility. So the key highlights, of course, was market rebounds. Technology stocks led gains, with Apple and NVDA posting notable increases this week. Tesla shares rebounded since, of course, you all now know the Tesla, or the Elon Musk and Trump beef. It's like an awful divorce that we're watching. Mummy and daddy are arguing. It's really not ideal. And I think as a whole, we need to see these two united for markets to really push up. But I'm very surprised this hasn't caused a lot of volatility within the US markets, despite all of this, negative news. So again, it just hedges my bets to say that this looks to be set up in a bullish position right now. I mean, today alone, Friday, as of recording this, it looks to be, again, another positive day. So it's fair to say nothing can really slow it down at the moment. So macroeconomic developments for last week, we had a jobs report which basically showed an increase of 139,000 jobs being created. This was slightly above the expectations, but below the 12-month average. So again, it just looks incredibly bullish. We do have wage growth as well, which grew by 3.9%, which obviously has concerns around inflation. Sorry, I've got my lovely English breakfast tea here. It's not breakfast, it's at 9 o'clock for us right now in the UK. So inflation and policy, of course, we had investors are watching closely with the upcoming CPI index report for May, which will reveal the impact of tariffs and inflation. Last month, it was actually really positive. So if this continues, I think it's fair to say markets will continue to rally. And of course, Trump is calling for persistent interest rate cuts, but he's not going to get that anytime soon. It'll be late summer at best. So if we look here on what the hedge funds are actually positioning for the next week, well, hedge funds bought global equities last week, the quickest pace since November 2024, according to Goldman Sachs. However, despite this, the hedge funds have actually reduced their holdings in some of the large cap tech stocks, indicating a rotation to smaller sectors like penny stocks and small caps, in which are a bit more volatile but could prove more growth in the long run. So what can we expect for next week? Well, the market movers are going to be the economic data on June 11th. Consumer Price Index, for example. June 12th is the Producer Price Index, and June 13th is the University of Michigan Consumer Sentiment Index. So again, these are all going to be very key to actually understand what is happening within the American mind at the moment, and really understand what is going to happen with the broad market moving forward. So with the Federal Reserve, we do have the Reserve's next meeting scheduled for the 17th to 18th of June, so it's obviously next week, but people will start to be hedging their bets on potential Fed cuts or potential ideas of Fed cuts, but in my opinion, I'm not expecting to see any signs of this. So there are going to be a few notable earnings reports coming out next week, such as Oracle, GameStop, Adobe, and Kroger. So do keep an eye out for these, and looking forward to the market sentiment, which we will actually get onto later on. So this section here is where I'm essentially going to go over some of your favorite stocks to understand where the market could potentially move next week on an individual stock level. We're going to be looking at tech stocks, health stocks, you name it. I'll probably go over it. So to start this off, we're obviously going to be taking a look at NVIDIA. So on a price target, it does still look to be undervalued. And on a EMA, we're going to see here, when I can actually pull it up, that it is obviously well above all of its EMA. And on a MACD, it's obviously in a long position. It does look to be as if it is going to be closing up into its resistance here. It's about 2% off. And if it does break through this, then it will be on track to reach all-time highs. And from there, it could just go absolutely parabolic. So it's definitely something to be watching for NVIDIA. Obviously, we have just seen them do a massive beat on their earnings report. So it's all in the favor of NVIDIA right now, despite this recent news of Trump and Elon falling out. I know it intrinsically isn't linked, but they have still performed really well today. So NVIDIA could be a really good stock to be momentum trading at the moment, especially if it does break through this $144 range. If it does, then you could pay a bit of a premium and momentum trade this all the way up to what could be around the $170 mark and potentially even further. So next week, I am predicting that NVIDIA will do relatively well, assuming that they manage to break through this resistance here. But they could obviously bounce off of this. So in the world of healthcare, Hims and Hers has done incredibly well today, but it just still seems to be stuck going sideways. There is potential for this to climb up, but on the other hand of healthcare stocks, we're seeing Oscar Health potentially starting to emerge. It's not had a great day today, but this week so far has been really good for Oscar Health, so there could be a potential momentum trade going into Oscar. Novo Nordisk, I have a price prediction to be right up. It does need to break through this resistance, of course, but I do expect it to slightly fall down potentially. But even now, looking at this, it just looks to be as if the momentum is right behind Novo Nordisk. If I can delete these lines, it looks to be as if it could just go absolutely parabolic from here. The momentum is definitely on its side. It is in a long position on the MACD, and here, looking at the price targets, it's clear to see that the analysts are on the side of Novo Nordisk. And finally, Eli Lilly also looks to be in exactly the same position here. As you can see, it's pretty much correlating with what I predicted a few days ago, and it just looks to be as if it's going to catch up with its resistance here at 797. So again, another stock which can be successfully momentum traded. So now moving on to fintech, looking here at SOFI, this has actually done incredibly well today. It's up approximately what seems to be around 3% from memory. It's just broken through a level of support now, so that could give it a bit more support going forward. Whether it closes above this, it probably won't, to be honest. In fact, it hasn't, because now it's gone 9. So it's fair to say that SOFI could potentially see a breakout from here. It is forming a reverse head and shoulders, and it is in a long position on the MACD, and it looks to be opening up as well, which is really good. It's above all of its EMAs, so there is definitely a lot of support behind it at the moment. So according to what I can see here, the momentum could be starting for SOFI. So now looking at Robinhood, so this is what I expect SOFI to do soon, but the issue is with SOFI is it's really struggling to break out. I think as soon as it does, it will see something similar to this. So I've been in Robinhood for a while now. Well, actually, that's a lie. I did sell out because I'm unsure how much further this can go. I trimmed my position, so it's not as big. I trimmed it at 74, so back where it is now. But it has actually reached the high of 77. And I do think there is potential for this to continue, but I'm unsure if that is actually a possibility now. It looks to be as if it's going to struggle to go further than this. It is above all of its EMAs, and of course it's in a long on a MACD, but according to its average price target, this looks to be overvalued. So looking at AMD, this is a stock in which is just really struggling to break through its level of resistance here of 119. So it did actually bounce off of it earlier on in the week, like I said it would, but I would have liked to have seen it actually break through, and there is still potential for this going into next week. I think AMD struggles intrinsically where its PE compared to its peers such as NVIDIA. AMD is around the 80 mark, so compared to the 50 of NVIDIA, it looks massively overvalued and the market share is nowhere near as large. So I am tracking AMD very closely, but when it does break and close above this 120 mark, I expect this to be quite a momentous breakout and this could really skyrocket from here. But for me, I think it looks overvalued, but according to the analysts, there's still a what was 10% increase from here, and now looks to be around a 2 to 3% increase on average. But there is a high of a 72% increase, so it could be an amazing stock to momentum trade as well going into next week if it breaks these levels. You got to remember you do want to pay a bit of a premium for these stocks to basically understand that they are going to go up. So it's something to really watch closely. So Apple actually had a relatively good week, but this is a stock in which I can't recommend getting into. This company looks to be boring now. It really isn't doing anything anymore, but it has had a good week. And looking at Palantir, because this was another one in the thumbnail, it's definitely seen a big sell-off late this week. So it's fair to say this could be the end for the momentum in Palantir. But being realistic, it almost definitely isn't. This stock just continues to go up and up, and it's fair to say I can't imagine this going down, to be fair. I think it will probably go sideways from here. I don't really see it going too much higher. It's probably something in which we'll just continue to go sideways for probably around 3 months before it can make its mind up on where it actually wants to go. So market sentiment for next week, well, we are seeing bullish sentiment with 32% down from 37 last week, below the long-term average of 37. On a fear and greed index, we're currently posting results of 63, which is obviously well into greed. So it's fair to say that the majority of the market almost feels as if they are feeling as if they're missing out. That was a really hard sentence to say for no reason. The S&P is obviously briefly surpassing 6,000, which is actually where a lot of hedge funds predicted the end goal for this whole year to be. So it's fair to say it's outperforming a lot of hedge funds' expectations, which is almost scary in a way, because it obviously shows it's not supported. We're only just seeing the end of Q1 results and we're already at where a lot of hedge funds estimated. Tesla obviously experienced a 14% drop. Analyst perspectives, Morgan Stanley suggests a mild recession could be beneficial for stocks, which I actually perfectly agree with. I don't really want to see it, but it could definitely help. But I think right now we are mostly being driven by FOMO. It's fair to say that this could definitely be very unsupported and could definitely fall off. But we are seeing a lot of hedge fund managers such as Tom Lee saying that he's expecting the market to actually just climb up further and further this year. If you want my own personal opinion, I will draw it out for you now. So from here, I expect it to go a bit sideways, potentially a bit up. But in the long run, I expect it to drop maybe 2 to 3 to 4 to 5, maybe even to 6%. And then from there, I do actually expect the market to go a bit parabolic. Maybe not too far, but I think it will all depend if it manages to get past its resistance here. But if it does, I expect it to reach obviously new all-time highs and just continue to go on from there. How far, I couldn't tell you. I'm not a hedge fund, but I do expect it to go on. But I am expecting some sort of a reversal within the next month or two. When that'll be, I'm not entirely sure, but I feel as if the market does need it for a bit of sustainability, because we are now trading at similar levels before all of these tariffs were actually properly introduced, and the problem of tariffs hasn't actually gone away. There's rumors that they are getting dealt with. Obviously, China and the US are now back in talks, which is really good, but it's not taking away from the fact that these tariffs are getting unpaused in July and a lot of them haven't been resolved. And I think that could be the catalyst that will just drive this down. Whether or not that will actually get resolved, I hope it does, because that will definitely put the market in a better place. But realistically, it almost certainly won't. And if they do get resolved, it's almost going to be as if the US is going to be ripping off a lot of countries, similar to what we've seen with the UK, where we essentially got half a deal. It was just basically better off than not having all of the tariffs. So it's something in which is very obviously something like that we should be watching closely, but it's definitely a scary time to be investing, especially when Schiller's PE is all the way up at 36. But that is exactly when you should be positioning yourself for the gains within the momentum stocks instead of just the market itself. And for that, you could actually subscribe to my channel because I do go over almost daily momentum stocks. So if you are interested in how you can beat the market, do hit subscribe. So as for my prediction, short-term outlook markets may experience increased volatility ahead of the CPI release for next week, of course, and the Fed meeting in the coming weeks. Investors should be cautious, and potential pullbacks could obviously occur due to profit taking and the fact that this market is mostly now driven by FOMO. So like I said, it could fall off from here, but I don't expect it to be anything major. Long-term outlook is obviously very good if data is favorable and the Fed Reserve maintains and supports its stance on where it currently is. Markets could continue their upward trajectory long-term, of course. However, ongoing trade tensions and fiscal policy debates may pose risks to sustainable growth. So going over where I actually expect the market to go based off of my own momentum indicator here, well, it's just a parameter set essentially. Is the market currently undervalued compared to its current price? No, definitely not. Is it in a long position on the MACD? Yes. Is it above? Yes. Is it above that? Yes. So it's above the 50 and 200 day EMA. Is it undervalued according to the analysts, or in this case, the hedge funds? No. And is the price action a confirmed breakout? Well, pretty much yes. So that's currently where I stand with it. It does look to be as if it is breaking out, but it doesn't look to be that sustainable. And based off of my own personal macroeconomic health score for the US economy, I'm ranking this in at 68.6 out of 150. So it doesn't look to be as if it's in a good place right now. So I'm not expecting any Fed rate cuts at this point. And if you're wondering what this accounts for, it does GDP growth, CPI, interest rates, inflate, you name it, it probably has it, because this sheet is massive. So that is the current health of the macroeconomic situation within the US, according to my system. And according to my other system here, we can see the potential breakout stocks going into next week. Again, I still need to revise this formula because it is incredibly bullish, but these top 20 are really the ones in which could potentially have a lot of momentum. So if you are looking to momentum trade next week, these are the potential trades, but you have to do your due diligence on these because a lot of these may not be that sustainable. But of course, if you want someone to do that for you, then please do hit a like and subscribe, because I do regular videos on these momentum stocks. So I am going to end this video here. Again, I'm not a financial advisor. None of this was financial advice, but if you could hit a like and subscribe, that would be greatly appreciated for weekly macroeconomic videos, market predictions, and of course, momentum, well, setups essentially. So I hope you have enjoyed this video, and I will see you for the next one.